Ramat Beit Shemesh stands as Israel's fastest-growing city, a remarkable urban phenomenon experiencing approximately 5% annual population growth and demonstrating exceptional real estate market performance that defies national correction trends. With a population of 170,683 residents as of June 2024 and projected to reach 250,000 under government master planning, the city represents a hyper-development environment where rapid expansion creates both extraordinary opportunities and unique challenges for property buyers, investors, and sellers. The city's character as expansion of original Beit Shemesh creates distinctive neighborhoods, serving different religious and demographic segments while maintaining overall market coherence, driven by sustained demand from religious families, Anglo immigrants, and buyers seeking value relative to Jerusalem's substantially higher costs. The property market in Ramat Beit Shemesh during the first quarter of 2025 demonstrated exceptional performance with average prices reaching 2.11 million shekels, representing remarkable 9.2% annual growth compared to the same period in 2024. This dramatically outperformed national markets, experiencing corrections and positions the city as Israel's strongest major real estate market by appreciation metrics. Transaction volume reached 735 units during the quarter, up an impressive 13.5% year-over-year, indicating robust buyer activity when most Israeli markets faced transaction declines. The price per square meter averaged 16,600 shekels, with 10.3% annual growth. Properties moved in under 60 days on average, reflecting fast market velocity, where well-priced quality units attracted immediate buyer interest. The value proposition relative to Jerusalem represents perhaps Ramat Beit Shemesh's single most powerful market driver, with new construction priced 30 to 40% below comparable Jerusalem properties, while maintaining only 35-minute commute proximity to the capital. This dramatic cost differential creates compelling arbitrage opportunity for religious families prioritizing Jerusalem employment, religious institutions, and cultural connections while seeking affordable housing. For a family comparing a 4-room Jerusalem apartment at 4 million shekels versus an equivalent Ramat Beit Shemesh unit at 2.5 million shekels, the 1.5 million shekel savings represents transformative financial difference, enabling earlier homeownership, reduced mortgage burden, or allocation of resources to other family priorities. Neighborhood segmentation reflects the city's evolution and religious diversity, with 6 distinct districts serving different community needs. Ramat Beit Shemesh Aleph, the original development housing approximately 5,000 families, represents the mixed religious Anglo hub, where modern Orthodox and Dadi Leumi populations predominate, with properties ranging from 2.2 to 3.9 million shekels. Ramat Beit Shemesh Bet serves primarily Haredi and Hasidic populations with properties priced 2.0 to 2.8 million shekels, featuring extensive yeshiva infrastructure and strictly kosher commercial districts. Ramat Beit Shemesh Gimel, a mature development serving young families, offers properties ranging from 2.35 to 2.6 million shekels with modern planning and strong resale market. Ramat Beit Shemesh Dalet represents the high-growth frontier with properties priced 2.1 to 2.8 million shekels. Neve Shamir constitutes the newest district with mixed modern character, featuring properties from 2.4 to 3.65 million shekels and distinctive Ella Valley views, pools, gyms, and contemporary amenities. Mishkafayim serves religious populations with properties ranging from 3.8 to 6.6 million shekels in established locations commanding premiums. 3-room apartments of 95 to 115 square meters typically range from 2.2 to 2.9 million shekels, experiencing high demand from young couples and smaller families. 4-room apartments of 120 to 131 square meters range from 2.1 to 3.6 million shekels, serving core family segment with children. 5 to 6 room apartments appeal to large families, priced between 3.2 and 6.5 million shekels. Cottages and semi-detached homes command 6.0 to 7.0 million shekels, while private villas reach 10.0 to 12.0 million shekels. Historical appreciation data demonstrates four-room apartments appreciating 66.4% since 2017. The rental market demonstrates robust activity. Representative rental rates show Mishkafayim three-room apartments at 6,450 shekels monthly, Ramat Beit Shemesh, Aleph four-room units at 6,630 shekels, and cottages at 12,000 shekels and above. Projected rental growth of 7 to 9% reflects sustained upward pressure from population expansion, outpacing housing construction. Growth drivers operate across multiple reinforcing dimensions. The explosive 5% annual population growth creates continuous housing demand, absorbing new construction faster than most markets. The 30 to 40% value discount versus Jerusalem, combined with commute proximity, creates compounding arbitrage. Comprehensive religious infrastructure, including extensive yeshiva networks, numerous synagogues, complete kosher shopping ecosystems, and mikveh facilities, create self-contained religious community where families can maintain orthodox lifestyles without compromise. The strong Anglo community presence provides soft landing infrastructure for English-speaking religious immigrants from North America. Government-backed master planning toward 250,000 residents provides legitimacy and infrastructure investment commitment. Transportation improvements, including train station proximity and upgraded Highway 38 connectivity, enhance accessibility. New construction pipelines deliver hundreds of units in Dalet and Neve Shamir neighborhoods. Demographic strengths create structural demand independent of economic cycles. Haredi communities demonstrate over 11% price growth driven by large family sizes and religious lifestyle priorities. Religious Zionist sectors show vigorous activity combining religious infrastructure requirements with modern amenity expectations. International buyer presence provides capital inflows from buyers whose purchase motivations incorporate religious and ideological considerations beyond pure financial optimization. Mortgage activity of 1.48 billion shekels in the first quarter of 2025 indicates robust financing supporting purchases. Market considerations requiring buyer attention include infrastructure strain from rapid population growth, creating temporary pressures on roads, schools, and municipal services. Construction delays represent common occurrence in hyper-development environments. Commute times of 35 to 60 minutes to Jerusalem and Tel Aviv, respectively, require acceptance of suburban lifestyle. Community segmentation across neighborhoods requires careful matching of buyer preferences with appropriate areas. Pre-construction purchase risks require particular attention, with builder financial stability representing critical due diligence consideration. Buyers should verify builder track records, inspect financial statements, review guarantee structures, and consider legal protections before committing substantial deposits. Religious families establishing permanent residence should prioritize neighborhood-matching religious observance levels and cultural preferences. The rapid appreciation potential creates wealth-building opportunities for buyers capable of identifying emerging neighborhoods before full maturation. The Jerusalem value arbitrage creates compelling entry point for families prioritizing affordability. Rental investors benefit from sustained tenant demand and projected rental growth. The fast market velocity suggests buyers should act decisively when appropriate opportunities arise. For sellers, the exceptional market strength creates favorable positioning, with sustained buyer demand supporting pricing power. Properties should emphasize proximity to religious infrastructure when marketing to religious buyers. The Anglo buyer segment represents important market with specific preferences requiring specialized marketing through English language channels. Interest rate considerations affect Ramat Beit Shemesh differently than secular markets. Religious families often benefit from community Gemach lending networks, providing interest-free or low-cost loans, supplementing conventional mortgages. Large family sizes mean religious buyers prioritize space over luxury finishes. The cultural emphasis on home ownership within religious communities, combined with extended family financial support networks, creates buyer pools maintaining purchase capacity even during economic downturns. Government policy toward Ramat Beit Shemesh development appears supportive, given master planning and infrastructure investments. The city's positioning as solution to Jerusalem housing affordability crisis aligns with government objectives. Environmental and quality of life considerations reflect the city's rapid development character. The Judean Hills location provides attractive scenery and moderate climate. Geographic positioning requires car dependency for most daily needs. Long-term viability depends on successful execution of master planning and absorption of projected population growth. The ambitious 250,000 resident target requires absorbing an additional 80,000 people beyond current population. Success depends on continued religious community demographic growth, sustained Jerusalem housing cost differentials, transportation infrastructure improvements, and capable municipal governance. Comparison to alternative religious community destinations helps contextualize the value proposition. Jerusalem neighborhoods command premium pricing, but provide unmatched access to Western Wall, yeshivot, and religious institutions. Modi'in Illit represents alternative Haredi city at comparable or lower price points. Beitar Illit offers additional Haredi alternative with different community character. Looking forward, Ramat Beit Shemesh property market trajectory appears positioned for continued strength based on fundamental demand drivers including sustained population growth, Jerusalem cost arbitrage, religious demographic dynamics, and government planning support. The exceptional first quarter results demonstrate market momentum suggesting near-term continuation of favorable dynamics. Ramat Beit Shemesh emerges as Israel's fastest-growing city, delivering exceptional real estate performance through unique combination of religious community demographics, Jerusalem value arbitrage, comprehensive religious infrastructure, and government-supported master planning. The market serves religious families prioritizing community cohesion, large family accommodation, and affordability over luxury positioning. For religious Jewish buyers seeking Israeli homeownership, Anglo immigrants requiring soft landing communities, and investors pursuing high-growth market exposure, Ramat Beit Shemesh provides compelling proposition combining rapid appreciation, strong rental dynamics, and demographic tailwinds. The city rewards those who value what Ramat Beit Shemesh specifically offers: affordable religious community living with Jerusalem access.